Hello everyone, welcome once again to another video. Hope you guys had a wonderful week and you guys are managing your risks properly. Currently in front of us is the daily time frame, daily chart of Nasdaq and the Dow. And this was the Friday drop, right? This was the tweet of Papa Trump right there. And after that we saw what? We saw a lot of like 1, 2, and the third day is this one. Currently in Nasdaq, we are seeing what? Monday was an inside bar, Tuesday was an inside bar, Wednesday also is an inside bar of the Friday's range, right? And for you to understand, the range of Friday, it holds a lot of liquidity because Fridays are usually used for reversals or the trading back into the range. While we have Nasdaq showing us inside bars, we had the Dow, right? We had the Dow trading into it. And the reason behind why we saw the Dow trading back into the range of the Friday was what? I want you to look at this candle right there, Tuesday's candle. All right, on Nasdaq we have a down close candle, while in the Dow we have an up close candle. And if you would see, we took the low, right, and we took the high in both the assets, which is understandable, no problem, because anyways it was not a tradable day. But the only thing which we saw was Dow closed above the Monday's candle while Nasdaq closed inside again, right? So this is giving us what? An indication that there is a reversal coming up sooner or later. But what tips off that the Friday's range will be covered by the Dow instead of the Nasdaq is if you can look at the opening prices. Right? You see the difference? The Dow opened higher, making it the catalyst of taking out the Friday's range. Once it took out the Friday's range, while we are trading in the whole day, and I sent this thing in the group, and if you're not in the group, by the way, you can go and join the group from my Telegram channel. What we are looking at is a concept which you can use as well. Since in quarterly theory you use quarters, right? You use quarters, meaning you use the fourth part or the fourth division of the time or anything. But there is another concept which was given to us by Trader Day again, where we can use 2 quarters as one. So you can use 2 of them and 2 of them, which becomes double. That's why the name doubling theory, right? So those who are asking for the indicator, this is the indicator. It's not an indicator basically, it's just a tool which we use to delineate time. That's it. It's not something which tells us buy or sell. Nothing. There is nothing on the chart which tells me buy or sell, right? So here we are. This is the indicator, and this is the setting if you guys just want to look at it. I don't know. Right, so if I take my GAN box, now please don't ask me the settings for GAN box, but still I'll just give it to you guys. If we take these 2, meaning we take Friday 1, Monday 2nd day, Tuesday 3rd, and the Wednesday as the 4th day, right? We can use these 2 days as one, meaning these 2 can become 1 and these 2 can become 1. right? So this is just kind of an introduction. It's not like the basic nitty-gritty of it. But if you see over here, these 2 days and these 2 days, if I mark out Friday from here, sorry, on the Dow, Friday till Wednesday, right? What do we see? We have a crack in correlation between these pairs. Along with this crack in correlation, what do we have? We are in the premium of this zone. We have a clear drawn liquidity, which is right there, or maybe this low, right? And we have what? A change in the state of delivery right there. In the Dow, it's right there. And even in the S&P, we have one, right? This one right there. So don't mind all these lines. Now, you saw that the whole day price action was pretty much lagging. Like it was as if it was like just designed for all these things. It was just designed, right? But this is not it. This is not it. If you saw my previous video about the true opens, you would see that every single time price runs away from the true open, it runs into a liquidity zone, and then it just heads back into the true open, and then again it runs back into the liquidity zones, right? Over here, we have a reversal at these highs. We have SMT at the highs, meaning we have a 90-minute cycle SMT. All right? Right there. And here, you would see this high to this high, while this high to this high, right? So we have this, while we have what? We have a clear draw down below, right? I don't want price to actually just run back into the zone again, or even run these highs. These highs are secured, for like my understanding at least. And if you go ahead and look at these true opens now, we reversed from here, running back into the true open, 130. Price heading back up into the 6 a.m. opening price and the 7:30 true open, which is right there. Now price is reacting from it, meaning what? One asset, the Dow, is lagging behind slowly, while Nasdaq is trying to catch itself back up towards where? I'm pretty much sure this is going to be the scenario. We head back into this. And we just follow through right there. And possibly Friday or the next Monday will be the to go higher. This could be the scenario, right? But I'm very keen on buying at these lows. Like I wanna be a buyer for a long term at these lows. So guys should keep an eye on these things. And this is it for this video actually. And I'm making too many human errors basically. I don't know why, if I'm like afraid of losing or something. Because today I had a very wonderful trade which I took and I closed it because just one criteria didn't match with the pound. But anyways, I actually followed my rules and I've journaled it because I was in the trade while the getting was good basically, meaning the trade was perfect at that time. But once I saw that, I'll just show you guys. Wait, why am I even speaking? I don't know. So we're here, we knew, right? This is the CME futures. Firstly, this move from the bottom, it was called out in the group before this even happened, right? And currently we are bullish on the euro dollar and the pound. Okay, and profiling the market, profiling the day, the whole day, if you would see, we had an internal liquidity which is right there, a 4-hour fair value gap. Okay, and we swept these lows right there. The thing is, if you see, this is CRT. Basically, this is CRT, candle range theory, from internal to external, right? This is CRT one-on-one. But once it is combined with what opening prices, there is nothing which is as beautiful as this, I swear. So for me, of course, and PSP candles. So if you would see right there, let's see if we can spot it. This one candle, 915 candle, was the actual reversal candle. Literally, that was it. And I don't know what happened to me. I took a trade. You guys won't believe it because I shared it in the group as well. I took a trade right there, around here somewhere. Basically, my trade was here. I guess around here. Like the moment we closed this candle and then we moved back up, right? My trade was here. Or maybe somewhere higher. I didn't get like a proper fill, but due to the spreads. Okay, so my target eventually was these highs, the opposing highs, right? And this was also caused by 90-minute cycle early in the morning. And if you can see, the TP was perfectly hit, but the moment right here, when the moment I saw that the pound was also dropping down, like basically I was looking at a 15-minute, meaning the daily cycle, Kraken correlation. This one. At that time, the euro dollar took out the low while the pound was lagging behind. Right? It was over here at this time, but here we didn't have any PSP candle or something, so I just, expecting this candle to hold, I took the trade. The moment I saw the pound dropping down below, I closed the trade. And as it turned out, we had a lower time frame cycle sequential SMT right there, and price just moved back up again. So this goes to my journal as well, right? Because I followed my rules. Basically, I followed my rules. I just took the trade and I was waiting for it. And it, one of those days, guys, one of those days. Let's not just be bogged down by this, but there was a lot of money to be made, and basically I was frustrated the whole day. Anyways, I'm looking at this to hold, right? Basically my stop loss is at this breaker block, rejection block. So my targets are at least these lows, and then I'll leave something to run, right? And over here, if I'll go on a 15-minute on S&P 500, guys would see any OTE entry is perfect. An OTE entry over here would be the perfect one. All right. Right there. And this trade you might need to hold a little bit. Right. Put our stops at the highs or the rejection block. Either or is just up to us, right? And then we just wait. All right, this is not a financial advice. This is not a signal or something. This is just what I'm doing. And I'm looking at all these true opens which are skewed here and there, which means these true opens will act as anchor points later on. And look at this. a lot of orders were generated over here, a lot of it. Liquidated, everyone wants to buy here. Market does not give everything so easily. So, for me, my whole idea is based on the Dow taking the highs while everything else is leaving it. So let's see what goes on, and I hope you guys enjoyed the video, took something from it, and I'll see you guys next time. Until then, good luck and good trading, guys. See y'all.